Hello, welcome to the European Open Briefing for Friday, November the 10th. I'm Rafi Boyajan, currency analyst at xm.com, and we're going to be looking at the latest developments in the currency markets today. The US tax plan continues to dominate the currency markets this morning. The dollar is down again after the Senate yesterday published a different version of the bill than what was unveiled last week, as well as the revised version by the House. So that set concerns about the likelihood of the tax plan being approved, and also even if it is approved, one of the big concerns is the 1-year delay in the Senate's proposal to the cut in the corporate tax rate to 2019 instead of 2018. Other major currencies are more or less steady this morning. The Aussie is slightly up this morning, despite the fact that the Reserve Bank of Australia's latest economic projections showed a downward revision to the inflation outlook. The euro is continuing its rebound from 3.5 months lows, while the pound remains range bound. We have the sixth round of Brexit negotiations ending today with a press conference, so that's going to be very much in focus. We also have quite a bit of UK data coming up later, so that could potentially move the pound outside of its recent range. But let's start first with the dollar. We can see both the dollar index in purple and dollar yen in orange have been steadily drifting downwards this week. Dollar yen is back below 114, currently trading around 113.60. The Senate yesterday made some changes to its version of the tax bill. They are proposing a 1-year delay to the corporation tax rate cut till 2019. They also want to maintain the 7 income tax brackets, so they're not happy about the reduced income tax brackets that was unveiled last week, and they also want to completely eliminate the state and local tax deductions, which the House made some revisions. They actually want to maintain some of those deductions. So the House and the Senate could now begin a long process of negotiation, potentially signaling a delay. But even if the House goes ahead and approves the Senate's version, that would still mean most likely that we will see that delay in the corporate tax rate cut. And that's been weighing on equities. We're seeing global equities, not just US equities. They were down yesterday and this morning, as that's dampened risk sentiment somewhat, especially given the recent strong gains we've had in global stock prices. Let's move on to the Australian dollar now. We can see the Aussie has been trending upwards since Tuesday. It had initially fallen after the RBA decision on Tuesday, which was slightly more dovish than expected. Today, the RBA has published its quarterly monetary policy statement, where it's projecting inflation to be slightly lower than previous forecasts in 2018 and around 0.5 percentage points lower in 2019 than the previous forecasts. The RBA has revised its, or rather the government is revising its method of calculating inflation. That could potentially mean that the underlying inflation has been overstated by 0.3%, and the RBA says that they don't expect underlying inflation to reach 2% until early 2019. So this makes it unlikely that the RBA will be raising rates until towards the end of 2018 at the earliest. But despite that, the RBA has managed to maintain its uptrend since Tuesday. It did dip slightly, but overall it's being supported at the moment by the weaker greenback. It's currently trading around 0.7670. Let's move on to European currencies. We can see the euro did bounce back yesterday, climbing above 1.16 dollars. It's currently trading around 1.1638. It hit a 1-week high of 1.1655 earlier. It had hit a 3.5 months low earlier in the week. The euro is being lifted by rising German bond yields. We had a bit of a sell-off in German bonds yesterday, so that lifted German yields, and that's been supportive of the euro. Also, we had the European Commission yesterday publishing its autumn economic projections for the European Union and the Eurozone. They raised the Eurozone's growth forecast from 1.7% to 2.2% in 2017, and that would make it the highest growth rate in the region in a decade. So that's also boosted sentiment a little bit for the euro. The pound, meanwhile, we can see it's still stuck within this week's range, although it did drop below 1.30 at some points during the week. It's for now holding about 1.31. The sixth round of Brexit talks will conclude later today and will be followed by a news conference between David Davis and Michel Barnier. Investors, of course, will be looking for some signs of progress so that by December the talks can move on to trade. If that happens, or there's indication of that, that would definitely be positive for sterling. It's also been reported that Theresa May is considering upping the UK's offer for the divorce bill from 20 billion to possibly 30 billion in order to help accelerate those talks. So that could potentially be a mover for sterling later in the day. We also have UK industrial output data also to be watched for sterling traders. Finally, let's look at the New Zealand dollar and the Canadian dollar. The Kiwi is slightly down this morning. It came under pressure after the country's new finance minister, Grant Robertson, said that the dual mandate which they're proposing for the Reserve Bank of New Zealand of targeting both inflation and employment, that might result in looser monetary policy in some situations. He also said that while the RBNZ wants the RBNZ to keep its 1 to 3% inflation target band, he wants to discuss the focus on the 2% midpoint, possibly saying that the 2% midpoint will no longer be a strict target, that inflation could more freely fluctuate between that band. So that's negative for the Kiwi as it indicates looser monetary policy in the future. The Canadian dollar, meanwhile, is being boosted by the weaker US dollar. Also, we have the oil prices holding near 2-year highs. So that's all, given that oil is a major export of Canada, that's obviously positive for the loonie, which at the moment is trading near 2-week highs, having hit 1.2662 earlier in the day. It's going to be quiet the rest of the day. The main focus in the European session will be UK industrial output and manufacturing numbers and trade numbers as well. The only major data out of the US will be the University of Michigan's preliminary consumer confidence index. That's it from me. Thank you very much for watching and have a great day.